Hey guys, Todd Gordon of TradingAnalysis.com. This is the free video for Thursday, August 21st. And we had Fed meeting today. Actually, we had Fed minutes today. And it was pretty interesting. I think the Fed is now getting closer to having to move on monetary policy. We saw a movement in all four major asset classes today. We had moves in stocks, bonds, commodities, and currencies. We have positions in all of them with our research clients, and I'm happy to say we made money in all of them. A lot of these trades we've been discussing with you here on the free video. We're long the dollar, we made money. We're short bonds, which we talked about 2 videos ago, we made money. We're long stocks, we've been talking about forever, we made money. And we're short the yen, which is what we're going to talk to you about today. Now, let's set the stage a little bit here, okay? This is a key relationship that a lot of people don't quite understand, but it's very important, specifically in this market because of what is happening or what's about to happen with Fed policy. So we're looking at an overlay of the TLT, which is your 20-year U.S. Treasury bond ETF. It's a mix between the 10 and 30-year Treasury. And we also have the FXY, which is the Japanese yen ETF. So look at this. We have a long-standing correlation between these two. The correlation is good, but it tends to wander a little bit. And I'm going to show you that, in fact, the TLT, the bond ETF, tends to wander a little bit, and then a lot of times the yen will kind of snap it back in line. The first example was back here in 2010 and 2011. Notice the TLT sold off while the Japanese yen just went sideways. Eventually, FXY broke up to the top side, and that's what FXY did. Okay, we're getting a very similar but opposite situation here. We have bonds moving up, but FXY is saying, yeah, no, not so much. So we saw the yen start to break down today, and that has strengthened the US dollar. And if you think about that, what does that mean? Okay, well, if we think this correlation is still intact, this bond market has a long way to fall. Okay, that would mean if TLT goes down, bonds go down, which means the yields in the U.S., bond yields, interest rates go up, which makes the U.S. dollar more attractive, which is going to push that FXY, the Japanese yen, down. If you're trading spot FX, dollar yen rallies. If you're trading over here in the ETF or in the futures market, FXY, the Japanese yen, goes down. So we are short bonds, as we said in the video two or three videos ago. We sold bonds, we're still short bonds. We're going to show you actually how to add to that position. So the real takeaway here is there's a major divergence that needs to be unwound. Either TLT sells off pretty significantly, FXY rallies, or FXY continues to sell off and bonds really sell off over the next couple of years, which I do think is going to happen. So that's the intermarket perspective, okay? Let's get into the FXY. All right. Now, we have this trade on with clients. It's, a little bit of, look at what we did, but so what? I'm going to tell you the next trade to do here. We are short FXY. We did it via a 90, what do we do? We 95, 93 long put vertical. We did it in September, so we bought the 95 puts, sold the 93s, just a short-term trade to get us down to these old lows. Okay, we're going to need to put on another trade because we're getting close to max profit in this spread. Ultimately, here's where I think we go. We have completed a long-term triangle in the FXY. We've broken down in 1, back up in 2. We're now selling off in wave 3, 4, and 5. We should get down to the 1272 external retracement of wave 5 compared to 4. And that's at the $92 level in FXY. If things really get rocking, we could get down to the $91 level, which is the 1618 relationship. So if we're down here at max spread, max profit in the spread, we're going to have to do another one. Volatility is still fairly low here in the FXY, so you could do something like, if you want to do like a 94, 92 put spread in October, you could do that. I don't want to do it in September. I don't think it's going to give you enough time. So look for that one. All right. Now let's move over to TLT. Okay. This is the exact same trade that we told you about, as I said, 2 videos ago. This is the chart right here. into this big old resistance level in the TLT market up around the 119, 120 level. So we have failed just below 119. We have since moved lower. Here's the trade we're going to look to put on with clients tomorrow. All right. We are going to do more short call credit spreads. Okay, we're not going to be buying verticals, we're going to be selling verticals. And the reason being, implied volatility in the bond market is high. And I'm actually going to show you that I think implied volatility is at resistance. So it makes more sense to be bearish the market and express that bearish opinion by shorting premium, shorting volatility as I expect it to contract. So let's go over to Thinkorswim over here, just plotting implied volatility on here on the TLT market. And you can see throughout this entire rally, we have not been able to get above about 12 or 13% on the implied volatility. It's resistance. We're up against resistance again. Okay. The last time we saw a big break above this 13 level was this final little breakdown here. Okay, so if this thing really wants to get going, we'll see if volatility wants to move higher. But unlike stocks, volatility is not inversely related to the bond market. Okay, I mean we can see, we can see bonds selling off here, and we can see some very low implied volatility. Look, bonds selling off right here. Look at implied volatility really drop. And in fact, it took a low in implied volatility to put a low in to TLT. All right, so don't get this mixed up like the S&P. If the S&P's drop, volatility goes up, and you don't want to be short volatility. Okay, we have a pretty established range in here, up around the 13 level in implied volatility for TLT. I'd rather be short. If this thing really wants to shake up and volatility wants to move up, that's fine. Okay. So that's fine. So the trade we're looking to put on all together in the bond market, I'll move over here to Dow. We want to be short TLT. It's got a 40 IV rank, which is a nice little indicator here on Dow. Anything above 40, 35 to 40 is good in ETFs. So this is the trade we want to do. We want to sell I want to go out to 58 days out. I want to sell the 116, 117, short call vertical. We'll get about 40 cents, which is nice. Usually you want to try to get about a third of the width of the spread. This is a dollar spread, so 33 cents would be acceptable. You get 40 cents. It's got a 54% chance of success. So that's the trade, guys. To be short bonds to move down, which we now know that short bonds will allow the yen to continue to move down, which strengthens the dollar, which makes sense as the Fed is going to wind down QE. The dollar should rally, bond yield should rally, bonds should sell off, and I think stocks are going to continue to rally well above 2,000 in the S&P. All right, I know it's a big video. There's a lot going on, but this is a pretty important day. So, guys, if you liked the video, if it helped at all, give me a like, give me a subscribe. The more likes and subscribes I get, the more I know you guys like these videos, and I'll do them. I appreciate the commentary and the feedback. If you have questions, be sure to type them in. And I'll see you on the next video update, guys. All right, talk to you soon.